Hello everyone, welcome and good morning and welcome to today's session. So today we are going to talk about chapter 13, okay, group audits. Now, what we are going to discuss here in today's chapter is about how to perform group audits. And when I say how to perform group audit, it's group audit with respect to, entities having subsidiaries, entities having, consolidations. So we will be talking about consolidation and subsidiary audits, and more on that line. Okay. Before I proceed to, any of the topic of the group audit, can anyone tell me what is the requirement of preparing consolidated financial statement as per Companies Act? What is the requirement as per Companies Act? Anyone? What is the requirement of preparing CFS as per Companies Act? That's a consolidated financial statements. Okay, Viraj, very good. Anyone else? Requirement of preparing consolidated financial statement as per Companies Act. Anyone? See, that is a base for us. Okay, Gundu, very good. So what that particular section says? If you can summarize in a one or two line. Very important. See, this will be the base. We will be discussing on this line only, the provisions which are there, the requirement and everything will be, discussed in detail. Anyone? No? I'll give you 5 minutes more. I give you 5 minutes more. Think what is the requirement of Companies Act with respect to preparation of consolidated financial statement. What Companies Act says about it. Think. Because, or you can even do Google as of now, or you can check. The reason because you should be aware that what is the requirement of Companies Act with respect to the CFS. Otherwise, and remember in the last lecture also, I asked everyone to read chapter 13. And that was the purpose that, when we will be discussing, you should be aware of the basic provision that we are discussing today. Okay. So, uh, okay. So, no one? Okay, let me explain. That's a very disappointing one. Okay. So, when it comes to the Companies Act, the requirement comes from section 129. 129.3 of Companies Act. which talks about that where a company has, okay, one or more subsidiaries, it shall, okay, in addition to the financial statement, provide under subsection 2, prepare consolidated financial statements. So the section requires to prepare consolidated financial statement when, there is one or more subsidiaries. Company has one or more subsidiaries. At that particular point in time, it becomes mandatory for a company to prepare consolidated financial statement. And the manner and everything that is prescribed that has been already prescribed, okay, under Companies Act itself. And what it says that sorry. Okay, what it says that that the manner, it shall be in the same manner the way it is being prepared for the separate financial statement. Okay, and it shall be laid before the annual general meeting of the company along with its financial statement under subsection 2. Then, provided that the company shall also attach, okay, along with its financial statement, a separate financial statement containing the salient features of the financial statement of its subsidiaries. So, two things. One, salient features of subsidiaries. Number two, where a company has one or more subsidiary, it shall, in addition to financial statement prepared under subsection 2, shall prepare a consolidated financial statement of the company, okay, of all subsidiaries in the same form and manner as that of its own. Means it should apply schedule 3 and that should be laid before the annual general meeting of the company. Now, these silent features are required to be prepared in AOC form 1, AOC 1 form. Okay. Adoption goes then one after 129.3, it goes to section 129.4, which says that provision applicable to preparation and presentation, adoption, and audit of financial statement. So, provision applicable to preparation, adoption, and audit of FS, okay, of holding company will apply to CFS also. Means whatever provisions are there for the preparation, adoption, and audit of FS of holding company, that's a standalone financial statement. The same will be applicable to the CFS, that's the consolidated financial statement. Clear? Okay. The next part is our accounting standards and, okay, requirement of preparing in a particular format. So we have a schedule 3 applicable and the accounting standards. Can anyone tell me what is rule 6 of the company's accounts rule 2014? Rule 6 of companies accounts rules of 2014. Can anyone tell me about this rule? Anyone? Come on. Can anyone tell me about this rule? Okay. Very good, Tanisha. Very good. Yes. So, Rule 6 of the company's accounts rule says that the CFS should be prepared as per Schedule 3. CFS should be prepared as per Schedule 3. Okay. Now the question comes is, with all these things and everything, whatever we have discussed, what about a company which is, not required to consolidate its financial statements? So the company who is not required to prepare a consolidated financial statement but has subsidiaries. So as of now, what we were discussing is company having subsidiaries S1, S2 is required to prepare CFS. Okay, company having subsidiary is required to prepare CFS as per Schedule 3, and whatever provisions are there, they should be in the similar line to the standalone financial statement. But what if the company is not required to prepare the CFS? So company is covered by section 129(3), that it has subsidiaries, but it is not required to prepare CFS. So the first question I have is this possible that the company has subsidiaries and still I'm saying CFS is not required to be prepared? Is this possible? Very good, Gundu. Sorry. Very good. Is this possible? Like company has subsidiaries S1, S2, but still not required to prepare CFS? When this is possible? Come on, guys. When this is possible? So section 129(3) of Companies Act again, provides that subsidiaries are required to prepare a consolidated financial statement. But is this possible that they have subsidiary and still they are not required to prepare consolidated financial statement? Very good, Bansha. Very good, Tanisha. Very good, Usha. Very good, Belamkonda. So, in certain scenarios, yes, this is possible. In certain scenarios, it is possible. See, Rule 6 not only talks about Schedule 3, Rule 6 also talks about accounting standards, that the financial statement shall be prepared. CFS should be prepared as per Schedule 3 and applicable accounting standards. Okay. Now, when the question comes is accounting standards, okay, in that case, again, accounting standard, we need to go to the accounting standard. But having said that, in the Rule 6 itself, okay, in the Rule 6 itself, there is an exemption given. So what this rule says is, just a minute. Sorry. Yeah. What Rule 6 basically says is that Rule 6 also has some exemption embedded in itself. Okay. That is, it says that nothing provided in that particular section will be applicable in following categories. Okay. And what is that following categories? We need to see. So, just a minute, let me, yeah. Okay. So following are the categories where, or conditions where, if they apply, then the companies are not required to prepare CFS. And this is an proviso to Rule 6. Remember, so Rule 6 was saying that, prepare CFS as per Schedule 3 and applicable accounting standards. But proviso says that this rule will itself not applicable to, companies who are falling or, fulfilling this criteria. So we need to understand what is, the requirement, or what are the requirements enumerated in those criteria, so that accordingly we can understand, when CFS will not be applicable after having, okay, after having multiple subsidiaries. Okay. So let's go to the rules. Rule says that, provided further, nothing contained in this shall apply in respect of preparation of consolidated financial statement by company if it meets the following criteria. Which are the following criteria? Number one, if it is a wholly owned subsidiary, okay, fine. It is a wholly owned subsidiary, or it's a partially owned subsidiary of another company, and all its other members, including those not otherwise entitled to vote, means all members kind of have been intimated in writing, for which the proof of delivery of such intimation is available with the company, and do not object to the company presenting CFS. So they do not object to the company not presenting the CFS. Okay, so they are fine, means with the company not presenting the CFS. Okay. Second, the company whose securities are not listed or are not in the process of listing on any stock exchange. Third, its ultimate or any intermediary holding company files consolidated financial statement with registrar, which are in compliance with the applicable accounting standards. In these conditions are satisfied. Okay. If these conditions are satisfied, then company is not required to prepare CFS. Company is exempt from preparing consolidated financial statement. So the provision says that provided further that nothing contained in this rule, that is a rule 6, apply in respect of preparation of CFS by a company if it meets the following conditions. When the following conditions are met, then only it is not applicable. And these conditions are and, not or. So these three conditions, when they are triggered together, then only exemption is available. Okay. Otherwise, it is not. Clear? I'll come to your doubt, Kanisha, in a minute because that will be the next point itself. Clear? Any doubt? So the condition is wholly owned subsidiary, okay, of another company. All its members have been intimated in writing. So in writing, they have been intimated that company is not going to prepare or present consolidated financial statement, and they don't have any objection to that. Number one. Number two, securities not listed. Number three, ultimate or any other intermediary holding companies preparing CFS. If these three conditions are satisfied, then exemption can be obtained. So not required to prepare CFS when three conditions are met. I'll summarize here also. All members intimated and not objected, like they are not objecting. Second, that securities are not listed. Third, ultimate and or like not and or any intermediary holding is preparing CFS. You satisfy these three conditions, then company having subsidiary will still not, can take an exemption of not preparing CFS. Okay, so when it says all its other members, including those not otherwise entitled to votes, all its other members means, let's say, for example, if it is a wholly owned and or a partly owned subsidiary, okay, then one of the member will be the holding company also. So other members is other than the holding company. Because let's say if it is a partly owned subsidiary, then other than the holding company, okay, the members which are not, having holding percentage, minority interest, if they do not object and they are intimidated, then it is fine. Yes, even if any two conditions are met, the exemption cannot be obtained unless and until all the three conditions are not met. Any doubt, guys? Any doubt till now? But parent company has to maintain a separate financial statement. Yes. So see, separate finance, there is no bar on, there is no exemption from the separate financial statement. Try to understand one thing. So company is not exempt from maintaining separate financial statement. I'm only talking about consolidated financial statement. I'm talking about CFS, not SFS. Are you getting my point? So company, any which ways has to prepare a separate financial statement, Mancha. Any other doubt, guys? Any other doubt? Okay. If no further doubts, then let me proceed. Now, the next question comes is like, okay, we have discussed this thing and, rule 6 and the exemption of the rule 6. Now, the next question comes is there any other requirement? Because see, when we are auditing a consolidated financial statement, we need to understand what are the requirements. Okay. What are the requirements of the act? Reason because then only, see, in audit, what is the objective is to understand whether, financial statement are prepared in all material respect as per the applicable financial reporting framework. Now, financial reporting framework, applicable financial reporting framework is my Schedule 3 Companies Act. And if there is any some exemptions or something given in the Companies Act, then I should be aware of that, because then only I will be able to evaluate whether financial statement are prepared in all material respect in accordance with the applicable financial reporting framework. Okay. Till that time, it won't be possible for me to, check whether the financial statement are prepared appropriately or not. That's why the next part comes into the picture, that of Rule 6 itself. Okay. Of Rule 6 itself, which talks about basically, what is required to be done when this kind of scenario arises. Means if a company is not required to prepare consolidated financial statement, then what it should prepare? Like, is there anything that instead of consolidated financial statement, the company should prepare this thing? So answer is yes. And somewhere the answer connects to the accounting standards, and I'll explain in a moment. So what the answer, what the Rule 6, another provision of Rule 6 says. So that is this is actually first provision of Rule 6. And there was a second provision. Okay. So first provision says that provided that in case of a company covered by 3.129, 3.129 is the company which is required to prepare CFS. So that is 129.3 of the Companies Act, that the company shall prepare CFS. Okay. And which is not required to prepare consolidated financial statement under the accounting standards. Now, this is a very important point. It is not specifying the rule, but accounting standard. So not required to prepare under accounting standards. Then it shall be sufficient if the company complies with the provision on the consolidated financial statement provided in Schedule 3. So if the company is exempted through accounting standards, then the company needs to comply with Schedule 3 provisions on CFS. Again, if the company is exempt by accounting standards, not by the Rule 6 itself, Rule 6 exemption is different. Accounting standard exemption is different. Okay. Rule 6 is something different and accounting standard exemption is different. Can anyone tell me what is the accounting standard exemption? Which accounting standard we are talking about here? If anyone can tell me the name of the accounting standard and if anyone can summarize the provision, then it will be helpful. Anyone? Which accounting standards? Correct? Correct, Hari? No, accounting standard. Basically, which accounting standard talks about preparation of the consolidated financial statement? No, the number of the accounting standard or the name. Correct, Anumula? Correct, Mariprabha? Very good. No, Suraj. Actually, I'm talking about accounting standard on consolidated financial statement, not cash flow statement. CFS, consolidated financial statement. Sorry, guys. So, to avoid the confusion, consolidated financial statement, not cash flow. Very good, Bailam Konna. Very good, Venkata. So, very good. So, you guys have answered in DS 1110. Again, now when I talk about in DS 1110, it has exemption. Okay, with respect to the consolidated financial statement. Ind AS 1110 has exemption with respect to the consolidated financial statement. So, Ind AS 11, what Ind AS 1110 says with respect to preparation of consolidated financial statement. Okay, it says that, okay, it provides basically an exemption, okay, to investment entity. Okay, it provides an exemption to an investment entity, and I'll explain what is that. So there is a definition also given under the Ind AS 1110 to investment entities, and there is an exception to the consolidation. Okay, so Ind AS 1110 says that an entity that is a parent shall prepare consolidated financial statement the same way, but except for following. So there are certain class of entities which are not required to prepare consolidated financial statement. Just a minute, sorry. Just a minute. What it says that, yeah, an entity that is a parent shall prepare a consolidated financial statement, and this Ind AS applies to all entity except as follows. That is, one, a parent need not to present consolidated financial statement if it meets the following condition. And that condition is, it is a wholly owned subsidiary or is a partly owned subsidiary of another entity. Okay. And all its owners, including those not otherwise entitled to votes on a similar line. Okay. All its owners, including those not entitled otherwise to vote, have been informed about and they do not object. Number two, debt or equity are not traded in the public market, domestic or foreign. Third, did not file or nor is in process of filing, its financial statement with the Security Commission or other regulatory. Means not in the process of listing, basically. Okay. Fourth, its ultimate or any intermediary parent produce financial statements that are available for public use, comply with the Ind AS in which subsidiaries are consolidated and are measured through fair value. Okay. So 4 conditions are there. One, if it it's a wholly owned subsidiary or partly owned subsidiary, and owners have been informed about this, that the company will not be preparing its consolidated financial statements, and accordingly they do not object to it. Number 2, it's a wholly owned subsidiary. Okay. And its debt or equity are not traded in the public market. Debt or equity are not traded in the public market. And it's not, point number 3 is not in process of listing. Point number 4 is ultimate or parent produce financial statement, which is consolidated financial statement which comply with the Ind AS, and that is your scope of the Ind AS 110. Kind of, you can say, para 4 or scope basically of Ind AS 110. Okay. So the scope has the exemption. Plus, there is one more exemption given in the scope itself. In the scope itself, there is one more exemption given. And that exemption goes to investment entities. Other than this, there is one more exemption which goes to investment entities, which talks about what exemption is granted to investment entities. And that is, a parent that is an investment entity shall not present consolidated financial statement if required in accordance with paragraph 31 of Ind AS to measure all its subsidiary through fair value, all its subsidiary at fair value through profit and loss. So being a parent means it has subsidiaries and it's an investment entity. That entity is not required to prepare CFS. Para 4B, again of Ind AS, that is a part of scope. So these 2 categories are there where companies are exempt as per accounting standard from preparing CFS. And remember that these conditions are in addition to. It's not like I need to follow any of the condition. Okay, I follow one condition and get an exemption. No. Conditions are all together required to be satisfied. Either para 4 or para 4B. All things, but again, if para 4B says that if the parent is an investment entity, exempt from preparing consolidation. Para 4 says that if following of the conditions are met, exempt from preparing consolidated financial statement. So we need to check when we are checking whether whether the company is exempt from preparing consolidated financial statement as per accounting standards, then we need to check para 4 and 4b. Okay, to identify whether the company is exempt exempt from preparation of CFS. CFS is not cash flow. I'm talking about consolidated financial statements, not cash flow statements of CFS, to identify whether the company is exempt from the preparation of CFS under accounting standards or under basically Ind AS 110, which is applicable. We need to refer or slash check for exemptions under para 4 and 4b of Ind AS 110. So in order to identify whether the company is exempt or not, you need to check para 4 and 4b of Ind AS 110. And 4 and 4b talks about these two exemptions: condition based and investment entity based. So now the question will come, what about the exemption which is given in Rule 6? What should I do with that exemption? See, I'll tell you one thing. If you compare the exemption given in Rule 6 and the exemption given in Ind AS 110, why there are two separate set of exemptions, that we need to understand first. If anyone can tell me why there are two separate but same type of exemptions. If you see Rule 6, the three conditions were, again, members are intimated and they do not object, process of listing, ultimate and any intermediary holding, preparing CFS. If you see Ind AS, it says that instead of members, they are using the term owners. Owners have been informed and they do not object. Debt or equity not listed. The third condition is not in process of listing also. This particular condition in Rule 6 was combined in a 1-1. So in Rule 6, the condition number 2 is equivalent to the condition number 2 and 3 of para 4 of Ind AS 110. So in Rule 6, you have both combined together. In Ind AS, you have two separate ones, but talked about the same thing. Means debt or equity not traded and did not file or not in process of filing or listing of its securities. And fourth one is ultimate or any intermediary preparing CFS with comply with the Ind AS. Now, why do you think we have two same exemptions at different places? Why do you think we have same exemptions at two different places? Come on, guys. Come on, guys. Why do you think we have two different set of exemptions? Same exemption, but at two different places. Okay, good, Tanisha. Okay, very good, Gundu. Very good, Venkata. Very good. So, Rule 6 covers those entities which are not covered by Ind AS. Means if an entity does not follow Ind AS, they can go for Rule 6 exemption. If you go in AS21, the exemption is bit different and bit, what do you say? Like, it's not on the same line that you have in Ind AS 110. In in AS21, the exemption is only where, the control is intended to be temporary, or it operates under severe long-term restrictions which significantly impair the ability to transfer the funds. So these are the two categories where a subsidiary can be excluded from consolidation. But again, that is not in much depth, or these are the specific case specific scenarios compared to what we have in India. Okay, so Ind AS is applicable to entities, certain entities. Okay, where Ind AS is not applicable, in that case, Rule 6 will be applicable. So exemption can be obtained through Rule 6. So first preference goes to the Ind AS, then second preference goes to the Rule 6. Clear? Why we have two same exemptions at two different places? The reason is Ind AS covers not all the entities, but Rule 6 does. Any doubt? Any doubt, guys? Till now? Tanisha, is your earlier doubt cleared? Like, is there anything further? Anyone, guys? Any doubt? Any doubt with respect to whatever we have discussed now? We are just discussing the scope of consolidation preparation where it is exempted, and where it is mandatory to prepare the consolidated financial statement. Okay. If no further doubt, let's proceed further then. So once we are clear that where we have to prepare consolidated financial statement, or where we are required to prepare consolidated financial statement, okay, and the company does not fall under the case of exemption, then what are the things we need to take care? Okay, we need to understand few things. Okay, what is the responsibility with respect to the consolidation and consolidated financial statement, being a management. Okay, once you understand the responsibility of a parent or management, then only you will be able to understand how to audit that, or whether they fulfilled or not the said requirement. Okay. Okay. So the question comes is, let's say, for example, I'm going to audit consolidated financial statement. How would I know whether the management has fulfilled their responsibility or not? Unless and until I don't know their responsibility. Unless and until I am not aware about their responsibility. So in that case, I need to make sure that I am understanding the responsibilities of management with respect to the consolidated financial statement. And that we will understand first, okay, with respect to an example. So that we are going to understand with an example, and we will be discussing this example in detail. Let's say you have just a minute. Okay. Let's say you have a parent entity, or S limited. I'll change the name to avoid the confusion. H limited was listed on NSE having market capitalization of rupees 25,000 crores. Okay, very big company. H Limited had four subsidiaries. That is S1, S2, S3, and S4. Okay, H Limited has four subsidiaries: S1, S2, S3, S4. Then S4 entity was incorporated in Netherlands. Okay, so it is not an Indian entity; it's an entity incorporated in Netherlands. Now, S2 entity is later on, come to S2 entity. Okay, so I'll just prepare the chart for you guys. H Limited, it has S1, S2, S3, and S4. S4, it's a Netherlands entity. It's an Indian. Okay. Now the question comes is that, let's say for example, H Limited is not exempt. I'm saying it is not exempt in any way. So don't think that the exemption is available. H Limited, let's say for example, is neither holding, or like neither investment entity, nor it has any exemption under the Companies Act or Rule 6 or Ind AS. Okay, so not exempt basically. Now, as a part of parent, so that becomes parent entity, and these are the subsidiaries. As a parent, okay, H Limited is responsible for preparation of financial statement. Now, assume you are part of, or not part of, rather, I will say you are head of consolidation team at H Limited. Okay. Assume you are head of consolidation team at H Limited. Now, being a head of H Limited's consolidation team, you need to answer these questions. Number one, what will be first step you will follow for consolidation? So, the first question is, what will be the first step that you will follow for consolidation? If you want to do a consolidation, what you will do? First of all, what you will do? You are the head of consolidation team now. What you will do now? The first step. Come on, guys. What will be the first step you will follow for consolidation? Simple. Come on, guys. What would be the first step? Yes, you are head of consolidation team at H Limited. So you are part of management. So when I say consolidation team, it's a part of management at H Limited. And you are responsible for consolidation. So in order to prepare CFS, in order to do consolidation, I'm talking about consolidation. See, if you want to prepare consolidated financial statement, you need to consolidate the number. You need to do the consolidation. So what will be the first step you will follow for consolidation? Not like these are the steps for preparing consolidated financial statement. I'm talking about consolidation. What you will do? How you will consolidate? Very good, Mariprabha. Very good, Anumula. So answer can be, what you guys have given is that first of all, we will obtain standalone financial statement of subsidiaries. That would be the first step. Then what will be the second step? Now, let's say, for example, you have financial statement of subsidiaries that was prepared as per their local GAAP. Let's say this is prepared as per AS, Ind AS. This is again AS. This is IFRS. And this is Ind AS. Now what you will do? You have all the financial statements. Now what? You have called for the balance sheet and financial information of the subsidiaries. You got it. Yes, Mancha, very good. Very good, Charu. Yes, you communicated with the management and collected the information, gathered the financial statement, Tanisha. Very good. Now what? What is the next step? You have the financial statement with you. What you will do next? Very good, Mari Prabha. Come on, guys. What would be the next step? Very good, Anumula. Very good, Tanisha. Okay, Suraj. Very good. Very good, Venkata. So the second is I will convert subsidiary SFS into, okay, into NDS SFS, okay, to align with parent company's financial statement. Okay, to align with the parent company's financial statement. Now, one important question, very important question that I have here with respect to point number two. Why I want to align with the parent company's financial statement and policies? Financial statement and policies. For this, pass necessary adjustment. We need to pass certain adjustment to bring either to convert them into NDS, or if they are in NDS, then to align with the policies that are followed by the parent company. But why we are aligning with the parent company? Now the next question I have here is why to align with parent companies financial reporting framework, applicable financial reporting framework or policies. Why I need to align? Where it is written that I need to align? Where it is written that either align to the applicable that align to the parent company's applicable financial reporting framework and policies. Where? Sorry. Where it is written? Yes, Tanisha, but we are assuming that we are preparing to comply with the company act here. It is not for the internal purpose, because at the end you are going to audit this CFS as a part of your statutory audit. So the question was that the company first is required to understand the purpose and scope of the CFS, whether it is for the internal use, management use, or compliance with laws and regulations. So here we are assuming that it is for the purpose of company act, annual statutory consolidated financial statement that is required to be prepared and required to get audited under company act. Why I am required to align with the parent company applicable financial reporting framework and policies? Why? Where it is written? Why can't I, see, what I do is I take S1, S2, S3, S4 financial information. I translate, or convert that to the parent, to align with the parent companies. Why can't I change the parent company's information and get it aligned with the subsidiary? Let's say I align, I pass adjustment at the parent company and align parent company's financial statement according to one of the subsidiary. Why can't I do that? Anyone? Maniprabha, bit closer, but not the correct word. Very near to the answer. No Charu, no Tanisha, no Suraj, no Mancha, no Venkata. So I'm saying, why shouldn't I prepare the CFS as per the subsidiary? Let's say I'm taking S1, which is Indian subsidiary, already preparing financial statement as per AS. Why can't I convert H Limited, S2, S3, S4 financial statement into AS? Why should I prepare in NDS? Or let's say, for example, hypothetically, forget AS. I'll take S2. It's NDS. But there are some policy changes between H and S. Why can't I prepare as per S2's financial policies, the policies which are adopted by S2? Where it is written that parent company has to prepare CFS as per his applicable policies. No Mancha. But Anumula, where it is written that parent company has to prepare CFS as per the applicable financial reporting framework and the policies of the parent company. See, we are following, but we do not know how to, why we are doing this. No, Tanisha. Your answer is somewhere going correct, but again, there is a specific requirement. Very good, Anumula. Very, very good. Very good, Venkata. So the answer lies in section 129.3. Simple. It says that prepare consolidated financial statement of the company and all of the subsidiaries in the same form and the manner of that its own. Simple. It says that you have to prepare in the same manner of your own. Means you have to apply the same policies. Means you have to apply the same financial reporting framework that the parent is applying for its own separate standalone financial statement. Section 129.3 itself, first of all, talks about what is the manner of preparing consolidated financial statement. Before I go to India, before I go to anywhere else, it's written in the 129.3 itself. Why I adopt, the financial reporting framework and the policies of parent. After having or after doing so the answer for this is because of section 129(3). Simple. Because of section 129(3). Now, once I get the financial statement, I need to convert it. I need to pass necessary adjustment to convert that financial statement into equivalent of the parent one. And then I will perform consolidation. Okay. Of those financial statement by line consolidation or something, whatever method I prefer or whatever is allowed as per the Indians, I'll do the consolidation. So that is the thing that we do in the consolidation. Okay. Now, like identifying the uh, SFS of the subsidiaries, even the subsidiaries, okay, reportable segments, related party transactions. But when I talk about these adjustment over here, these adjustment can be of various categories. One, adjustment with respect to harmonization. Harmonization of accounting policies and accounting framework. That is financial reporting framework basically. So harmonization of accounting policies and financial reporting framework adjustments can be there. The second can be, adjustment with respect to intercompany elimination. Okay. Third, it can be, adjustment related to gap conversion. So I am talking about here the only policies and framework, accounting framework. Here I am talking gap conversion. So let's say, for example, some companies are using cash basis, not accrual basis, or some companies have different accounting policies. So I'm converting that into the parent one. Whereas some companies are following IFRS or some is following AS. So from AS to Ind AS, the gap conversion will be here. Okay. So harmonization of accounting policies, intercompany elimination, gap conversion, these can be the type of adjustment that can be passed or that can be effected in the financial statement. Clear? Now the question comes is these particular adjustment can be of two type. These basically adjustment can be of two type. Either these can be your permanent adjustments or they can be your current period adjustment. And I'll explain those in detail, don't worry. Okay, current period adjustment. Now the question is why we are going or learning the adjustments. Why we are learning, about the adjustments here. The foremost reason of learning about the adjustment and understanding how the consolidation happens, because once you understand the process of consolidation, you will be able to understand how to audit that, because at the end my target is to audit the consolidated financial statement, and for that I should be aware what adjustments has been passed. Clear? Any doubt? Any doubt, guys? Okay. If no further doubt, can anyone give me some examples of permanent adjustments? Can anyone give me some example? What would you call permanent adjustments? You might have already seen various, permanent adjustments in FR. What permanent adjustment I'm talking about here with respect to consolidation? Come on, guys. You have chapter 13 in first subject, that is consolidation and separate financial statement of group entities. You have unit 4 in DS 110 consolidation procedure of subsidiaries. You might have already seen some kind of permanent adjustments. Very good, Manoj. Permanent adjustment under consolidation. I'm talking about permanent. No, Tanisha, that will fall part of current period adjustments. Suraj, I don't think so. That will be what you say, consolidation adjustment. Come on, guys. Permanent adjustments. So basically, when I talk about permanent adjustment, I talk about uh, adjustment of pre-acquisition reserves. Okay, pre-acquisition adjustment, allocation of pre-acquisition reserve with respect to parent and minority interest or non-controlling interest. Then adjustment of goodwill or capital reserve. Okay, if you want to net off those both. So these are the one-time adjustment that they will remain same throughout the period, throughout the consolidation in every year. So these adjustments are same every year. Okay, every time or every year. I'll say every time because you decide at the time of first consolidation itself or acquisition, that okay, what will be the adjustment, and every year you pass the same adjustment. And when I talk about the current period adjustment, there is a, current period is kind of recurring, but based on transactions conducted in that year. For example, unrealized intra-group profits on inventory, sale purchase, intra-group loans, interest paid received, adjustment relating to some alignment of policies, adjustment related to the alignment of your financial reporting framework or gap. So adjustment relating to the subsequent events. These are current period adjustment because they change based on the events that have occurred in that particular year. They do not remain same. But pre-acquisition goodwill or reserve allocation will be same throughout the consolidation. Clear? Correct, Venkata. Goodwill or capital reserve. Correct, Suraj. Tanisha, so current period adjustment is every time intra-company transactions are eliminated, that is the current period, because based on the current period's amount, you adjust that. In case of permanent, it is, same amount do not change from year to year, but current period adjustment amount changes from year to year. Clear, guys? Any doubt till now? Any doubt with respect to whatever we have discussed? No? Okay. If no further doubts, then let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the session. Okay? Let's take a quick 10-minute break. Okay, so hello everyone, welcome back. We were discussing about adjustments. Okay, now the question comes is, that why we need to understand about the adjustment, and I discussed that we need to audit these adjustments. Auditing is necessary for these adjustments, and that's why we have to audit the adjustment. Okay, now the second question comes is with respect to what is the role and responsibility of the auditor. So I was just talking about the consolidation process and how to audit these consolidation things. I just explained you guys, like we need to audit, but how we will go in detailed discussion. But the next question that I have is how to actually, okay, how to actually audit. What is the auditor's responsibility with respect to the consolidation? Consolidation or consolidated financial statement. So, auditor's responsibility. First of all, tell me guys, what is the basic provision or the section which governs the auditor's responsibility in case of an audit under Companies Act? So, I'm asking provision under Companies Act with respect to duties of auditor. Which is that provision? Provision under Companies Act with respect to duties of auditor. So, normal. Duties of auditor, normal. Nothing with respect to consolidation. I'm saying normal audit. What is that provision? Section 143, absolutely correct. Very good, Mundu. Very good, Venkata. Okay. Now, my next question is whether section 143, let's say for example, 1 and 3 both, whether these sections, whether these subsections or section are applicable for audit of CFS. Okay, let's see who gives the first answer to this, whether these subsections are applicable for audit of CFS. Let's see who gives the first answer to this. Very good, Tanisha. Yes, they are applicable. Section 143(1) and 143(3) are applicable to the audit of consolidated financial statement. Okay, they are applicable. It's something, part and parcel for the auditor. Now, why they are applicable? The reason because they are applicable is, see, whenever we're doing the audit under Companies Act, okay, the auditor's responsibility goes, and if you see the wordings of the particular provision, okay, it says that the audit report shall also state the following manners, the following things. Okay. And everywhere the term which is used, it's a financial statement. Now, financial statements are prepared in accordance with one section, in accordance with the section 129, which includes consolidated financial statement also. Okay. So, which includes consolidated financial statement also. So, wherever the term financial statements are used, it includes consolidated financial statement. Because if you see the definition of even financial statements, okay, as per the Companies Act, what it says, the financial statement as per the Companies Act, which is defined basically, sorry, under 240, okay, subsection, section 2, subsection 40 includes balance sheet, P&L, statement of cash flow, statement of changes in equity, and an explanatory note forming part of these documents. Okay. So it is a generic one, balance sheet, P&L. It not says the standalone, but it only talks about the statement. Whereas section 129, which talks about the financial statement, has two type of financial statements specified. Number one, that is a standalone financial statement or a separate financial statement under 129.1 and consolidated financial statement under 129.3. Okay. So both financial statements are there. Also, 129.3 talks about, that the provisions of adoption, preparation, sorry, 129.4 talks about that preparation, adoption, and audit. Remember over here, I discussed 129.4 in detail. See, 129, preparation, adoption, and audit of FS will audit of FS of holding will apply to CFS. Means the provisions which are applicable to the standalone financial statement with respect to the audit will also be applicable to the consolidated financial statement in the same manner. In the same manner. Now, when I talk about in the same manner, means 143, 1 and 3 both are applicable to the extent they are possible. So, yes, applicable because of section 129.4, which says that provisions of audit will be applicable on the consolidated financial statement as they apply to the normal standalone financial statement. Even if you go under section 143 and proviso to that particular section 143.1, it says that the auditor of the company of holding auditor of the holding company will also have a right to access the records of subsidiaries and associates insofar it relates to the consolidated financial statement with that of its subsidiaries and associates. So 143.1 proviso gives power to inspect the books so that the audit can be done. And the duties specified under 143.1 and 143.1 and 143.3 can be completed. And the classic example to understand this, I'll show you one. To understand this particular example, we need to we will go through the annual report and we will compare with respect to the opinion on the standalone versus the opinion on the consolidated. Now see, this is the opinion on the standalone financial statement. Okay, this one. Let's go to the opinion on the consolidated financial statement first. This is the opinion on the consolidated financial statement. Okay. Now, if you see this particular portion, reporting on other legal and regulatory matters. First comes to the CARO, second comes 143.3. So, as required by section 143.3 of the Act and based on our audit and consideration of the report of the other auditors on separate financial statement of subsidiaries, as was audited by other auditors, as noted in paragraph A of other matter paragraph, we report to the extent applicable that we have sought obtained all the information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of our audit and of the aforesaid consolidated financial statement. In our opinion, proper books of account as required by law relating to the preparation and aforesaid consolidated financial statement have been kept. So far, it appears from our examination of those books and the reports of other auditors. Then, the consolidated balance sheet, the consolidated statement of profit and loss account, including other comprehensive income, the consolidated statement of changes in equity, consolidated statement of cash flows, dealt by with this report are in agreement with the relevant books of accounts maintained for the purpose of preparation of the consolidated financial statement. In our opinion, the aforesaid consolidated financial statement comply with the Ind AS specified under section 133 of the Act. On the basis of written representation received from the directors of holding company as on 31st March 2023 and taken on the record by the board of directors of holding company and the reports of statutory auditors of the subsidiary companies incorporated in India, none of directors of the group companies incorporated in India is disqualified on 31st March 23, being appointed as a director. And with respect to the adequacy of internal financial control with reference to financial statement of holding company and its subsidiaries incorporated in India and operating effectiveness of such control, refer to the separate report in Annexure B. Again, matters enumerated in Rule 11, okay, of Companies Auditors and Audit and Auditors Rule 2014, and they have reported on that also accordingly. So I'll not go in detail, but I'm just showing you that all the things which are part of your standalone financial statement with respect to report on other legal and regulatory requirements are already part in the consolidated audit report on the consolidated financial statement. There is no change on that. So section 143 is applicable in the same way it is applicable in the audit of separate and standalone financial statement. Clear? Any doubt? Any doubt, guys? Okay. Now the next question is that essays are applicable for audit of financial statement. The question comes is whether all essays are applicable in audit of consolidated financial statement, or only SA 600 is applicable. So let's see who will give the first answer to this. The first person to answer to this question, whether all SAs are applicable to the audit of CFS or only SA 600 is applicable. Come on, guys. Very good, Tanisha. Okay, the first one to answer, yes, all SAs are applicable. This is the correct answer. This is not. All SAs are applicable to the extent the SA in entirety is not applicable. If but all SAs are applicable to the audit of CFS. It's not that only I just need to rely upon the SA 600. So whatever we have discussed till now in all these standards, the same will be applicable in audit of CFS also. That means that when I'm planning the audit of consolidated financial statement, okay, I need to pay focus or attention on risk assessment, understanding the entity, its environment, understanding IT controls, understanding the accounting policies of parent and its component, determining the program, determining the nature, timing, and extent of the audit procedures that I need to perform, determining the use of other auditors' work, determining work to be performed by me. Okay. Again, when I talk about SA 600, SA 600 is also applicable. So if I'm relying upon the work of other auditor, component auditor, then I need to make sure that his work is adequate for my purpose. If he's not a member of institute, then I make sure that the method, logic, and the competency, skills that he possess are necessary and adequate for my purpose. So all these things are required to be complied with when I'm doing audit of consolidated financial statement. Whether it can be a joint audit of consolidated financial statement, it can be a single audit, also not a joint audit. But again, based on that, we need to decide what audit procedures are required to be performed by whom. Various adjustment and everything is required to be done and required to be verified when I talk about consolidation. Okay, the same way I am doing for the standalone financial statement. I say 800, 580 management representations, 570 going concern, 560 subsequent event, 550 related parties. All things are required to be followed in the way they are required to be followed for audit of a normal financial statement. Now there is one question. Why 143 itself sufficient for the duties related to the CFS? Why we have to refer to 129.4? 130, 143, where is tell me where is 143 sufficient? Okay, go. I'll suggest read 143.3 once. Section 143, subsection 3. It only states that the auditor report shall state the following. It never says that the auditor report on the CFS or FSS. It never tells that auditor report on separate financial statement, separate or standalone financial statement, or audit report on consolidated financial statement. It only talks about audit report, auditor's report. That's why we have to see 129.4. Clear? Any doubt? Any doubt till now? Uh, no, the word financial statement only specifies, if you see the definition of section 2, subsection 40, it gives the name of the statement. Financial statement includes, but there also it has not specified whether standalone or consolidated financial statement. But if you go to section 129, that is the financial statement section, over there, over there, we have this, requirement under section 129(4) specifying that audit of consolidated financial statement will happen in accordance with the, the provisions which are there for the standalone. So FS does not include CFS and FSF. If you see the term financial statement, it does not specify consolidated financial statement. It is section 129 which specifies the consolidated financial statement. Clear? Any doubt? Any doubt? Yes, no. Okay. If no further doubt, let's proceed further. Now, the second question comes is, okay, audit is going to happen in the same way for the consolidated financial statement, except for the, some small differences with respect to consolidated adjustment and, some with respect to some gap adjustment and everything. So these procedures, so I need to, verify these procedures also. Now, when I'm going to verify these procedures, I have to make little modifications to that compared to the normal. That is, for example, when management has to obtain a standalone financial statement of the subsidiary, for me, it will become whether management has obtained all the standalone financial statement of all the subsidiaries. So completeness of the component is one important part for me. So for auditor, it will be completeness of component. Okay. Second, convert subsidiary FSS into India's or align with the parent company. Now for that, I need to first identify applicable financial reporting framework of parent, because it may happen that I may be auditor of the parent, or I may not be auditor of the parent, but I may be principal auditor. Remember SA 600? So I first need to identify applicable financial reporting framework of parent, then need to identify all adjustments required to be performed. So I need to understand which adjustments are required to be performed by management. Then only I can check whether all adjustment has been performed or not. Okay. Then consolidation. Okay. So then in this phase, I will understand whether all adjustments are performed appropriately. Okay. And whether financial statement, CFS, consolidated financial statement are in compliance with applicable financial reporting framework. Now here the applicable financial reporting framework will be same applicable financial reporting framework of parent. And I need to perform all these procedures. I need to perform all these steps in order to conclude whether, and to form an opinion by obtaining sufficient and appropriate audit evidence. Clear? Now, when I say all essays are applicable, all essays are applicable. So the question is, not a question, but the point is that, essay 700 series is also applicable. That means I have, essay 700 talks about basic structure of the audit report. 701 talks about key audit matters. Then I have modification related requirements also applicable. Then I have EOM and OM paragraph also applicable. I have responsibility with respect to the corresponding figures. Then I have to read other financial information also. So all these things, that is SA 700, SA 701, SA 705, SA 706, 710 and 720. All are applicable. In the same way or in the same manner, as they are applicable to standalone or to audit of standalone financial statement. And I'll just show you something. I'll go to the audit report. If you see in the audit report itself, this is the audit report on the consolidated financial statement. We have opinion, we have basis of opinion, we have key audit matters, we have other information paragraph, we have management responsibility, auditor's responsibility. Then we have other matter paragraphs. EOM might not be there, that's why it's not here. We have other matter paragraphs. Everything is here. The way they have in your normal or audit report of standalone financial statement, same is applicable over here also. In a similar fashion, it is applicable here also. Any doubt till now? Any doubt, guys? Okay, step one again. So step one was with respect to, identification of all the components. Completeness of the component means for consolidation, we need to identify how many subsidiaries are there. What if there are 5 subsidiaries and management has only identified or consolidated 4 subsidiaries? So identification of all subsidiaries is very important. Okay, very good question, Mansha. If all essays are applicable, what about essay 800? Is essay 800 series also applicable? What do you think, guys? Is essay 800 series also applicable to the consolidated financial statement? Is essay 800 series also applicable to consolidated financial statement? Audit of consolidated financial statement? Anyone? Very important question. Let's see how many of you can answer this. Let's see how many of you can answer this question. Whether essay 800 series is applicable on the consolidated financial statement. Good Anumula. Good Venkata. Yes, Tanisha. Okay. Let us go through a essay 800 series and CFS. So essay 800 series talks about basically specialized area. Okay. Where we have essay 800, these are applicable in special cases. We have essay 805. We have essay 810. Okay. Now, all three are applicable in specific cases. They are not applicable for the normal audit. Normal or statutory audit. Okay. So they are not applicable basically for normal or statutory audit. If they are not applicable for the normal and statutory audit, in the same way, uh, it doesn't make a difference whether this audit is of SFS or CFS. Okay. So if a particular essay 800, essay 800 is applicable only when there's a special purpose framework. They are not applicable for the statutory audits. They will not be applicable for the standalone and consolidated both. So whatever if it is applicable for standalone, it will be applicable for the consolidated. Now a question can be asked: what if I talk about audit of financial statement prepared in accordance with the special purpose framework, but these financial statement are consolidated financial statement? Okay. Preparation of audit of financial statement, but consolidated financial statement, not standalone financial statement, and they are prepared as per the special purpose framework. Will SA 800 be applicable in that case? See, now very important and very good question it is. Now when I talk about financial statement, okay, under SA 800 series, audit of a financial statement, again I do not specify, okay, whether it's a standalone or consolidated financial statement. I only say financial statement. So if you have CFS prepared as per special purpose framework, then yes, as their audit or audit of that CFS will be as per SA 800. CFS prepared as per the special purpose framework, not the normal way. Means Schedule 3 might not be applicable, NDS might not be applicable, in a different way it is prepared. Same way, if a single specific element of financial statement, it may be of a consolidated financial statement, accounts or item or whatever may be. If that item specific single financial statement is of consolidated financial statement, then audit of that element will require SA 805. And when it comes to the reporting, next part is reporting on summary financial statement. Reporting on summary financial statement. Now these are the financial statement again prepared from the these are the financial statement prepared from the audited financial statement, which were audited in accordance with SA. Okay. Now the question comes is whether can I prepare summary financial statement of a consolidated financial statement? Answer is yes. If your summary belongs to consolidated financial statement, then audit of same or engagement to report on same will be as per SA 810. So these are specific scenarios. These scenarios do not specify whether standalone or consolidated financial statement. They only talk about financial statement. Okay. Or financial statement item or summary financial statement. So if that is part of your CFS, yes, they will be applicable. But these are specific scenario not applicable in the normal or statutory audit. I hope I'm clear with respect to this SA 800 series and consolidated financial statement. Yes, depending upon the nature of engagement, you need to decide whether it's a normal audit, then SA 100, 200 to 700. If these are the special cases where SA 800 series is applicable, you need to apply SA 800. Doesn't make any difference whether it is the standalone financial statement or a consolidated financial statement. Any doubts? Any doubt, guys? No, no doubts. Yes, SA 790 series is also applicable. So, basic structure, CAM, modification, EOM, OM, corresponding figures, read other financial information are applicable in the same way they are applicable to the standalone financial statement, audit of standalone financial statement. So they are applicable in the same way. Any doubts? Okay. Now the next question comes is CARO and consolidated financial statement. So whether CARO 2020 is applicable to audit of CFS? Pretty simple question. I know most of you might already be aware about this. Whether CARO 2020 is applicable to the audit of CFS? So whether CARO 2020 is applicable to the audit of CFS? Very good, Gundu. Yes, Mansha. Very good, Tanisha. Yes. So answer is yes, it is applicable, only only clause, that is the last clause of the CARO, and I'll show you that one in the audit report also. If you see, as required by the company's auditor's report, Order 2020, the order issued under this is in terms of section 143(11) of the Companies Act, we give in annexure 4 a statement matter specified in paragraph 3 and 4 of the order to the extent applicable. And if you go to annexure A, it only has clause 21. According to the information and explanation given to us, following companies incorporated in India and included in the consolidated financial statement have certain remarks included in their reports and the company's auditor report 2020 CARO, which have been reproduced as per the requirements of the guidance note on the CARO. Okay, so these were the remarks of the standalone CARO reports, which have been reported under clause 21 of CARO. Clause 21 requires to report on the matters where there is a qualification by the standalone auditor. If the auditor of the standalone financial statement has qualified already some items in the CARO, Okay. That items are required to be reported by the auditor of consolidated financial statement in clause 21 in this manner. So you have the name of the company, sin, what is the holding of subsidiary, and where there is an unfavorable or qualified remark. Same way, this is the company, this is the qualified remark. And these are the entities, okay, where the report was not available. So they have provided the name of entities where report were not available. That is CARO with respect to consolidated financial statement. So yes, it is applicable only clause, but only clause 21 of para 4. Sorry, para 3. That's it. Nothing much. Another question I want to, another area I want to deal with in is, let's say, for example, I'll take above example. H Limited, S1, S2, S3, S4. We have four different subsidiaries. Let's say I have the name of auditor written in this particular way. So the auditor for H Limited is ABN Company. Auditor for S1 is HGN Company. S2 is DCN Company. S3 is XYN Company. And S4, let's say this is a Netherlands one. Okay, so I'll write it here, Netherlands. So the auditor of the Netherlands were MNO auditors, not member of ICAI. Okay, they are not the member of ICAI, but they are the auditors as per local laws. Okay, now this is a structure, or this is the way. Okay, auditors are there. Now the question comes is, these are the standalone auditors everywhere. For the CFS, consolidated financial statement of H Limited, the management wants that DCN company to be the CFS auditor. DCN company to be the CFS auditor. Now my question is this possible or correct or valid kind of thing to appoint any other auditor for CFS compared to what is there for the standalone financial statement? So for standalone financial statement of H Limited, you have ABN company, but for the consolidated, you have DCN company. Can we do that? Can we have two separate auditors, one for standalone and one for consolidated? Okay, Gundu, very good. Is it possible? Come on, guys. Yes, no. Is this possible or not? Okay. Good Tanisha, good Suraj, good Gundu, good Mohammed, good Charu. Very good. So, answer is yes, that is possible and that can be done. Okay. So the auditor of standalone financial statement can be different from auditor of consolidated financial statement. Auditor of standalone financial statement can be different from the auditor of consolidated financial statement. And the reason why this is possible because of SA 600. I'll show you how. Remember when we were discussing SA 600? Okay, I discussed a particular area. So this is SA 600. So at that particular point in time, I discussed one area, acceptance as principal auditor. And when I talk about principal auditor, this principal auditor means auditor of consolidated financial statement. In other words, so before accepting as a principal auditor, the auditor needs to understand whether his own participation is sufficient to be able to act as a principal auditor. And let's say, for example, if this comes, if let's say, for example, if the answer of this question comes to no, then the principal auditor, then the auditor of the parent entity will not be a principal auditor, cannot be a principal auditor. So that he needs to decide based on the materiality, principal auditor's degree of knowledge regarding the business of component, risk of material misstatement in the financial information of component, performance of additional procedure. All these things are there, which determines whether the auditor of this standalone financial statement can be the auditor of consolidated financial statement or not. So, as per SA 600, yes, this is possible. That auditor can be different for the standalone and auditor can be different for the consolidated. Clear? Any doubt? Any doubt, guys? Yes, very good, Tanisha. Principal auditor has to look into whether the work of another auditor, how that will be sufficient for his own purpose. Anumula, I'm coming to that point. That is the second point that I want to discuss. Okay. Now, the question comes is, upon S4 entity which is Netherlands based. Now, that is being audited by MNO auditors, not member of institute. Not member of institute. As a result, As a result, okay, can I use audit report or I can I rely upon the audit report of M&O auditors? Can I rely upon the audit performed by M&O auditors? So the second question comes is whether can principal auditor rely upon the audit report of of M&O auditors? Come on, guys. Come on, guys. Okay, Suraj. Okay, Mansha. Correct, Tarisha. Very good. Okay, Venkata. Very good. Come on, guys. Okay, Tanisha. Let's say they are following not ISA, but they are following some local auditing standards. Okay. So audit is done on basis of local auditing standards, not ISA. Okay, Charu. If you guys are saying yes, then why? I want the reason also, where it is written. If you are saying yes, where it is written that we can rely. Come on, guys. Very good, Tanisha. Okay, Venkata. But Venkata, do you think Section 143 of the Companies Act will be applicable to the entity incorporated in the Netherlands? Come on, guys. Where it is written? I have only received one correct answer as of now with respect to that. If you guys are saying yes, then where it is written that I can rely upon an audit not performed by a member of institute? Very good, Charu. Two answers by Tanisha and Charu. Very good. But question comes is Venkat that while performing the audit of consolidated financial statement, I need to refer to the audited standalone financial statement. Can I rely upon the audited standalone financial statement which are not audited by the member of ICAI for the consolidation purpose? Or I will count those financial statement as an unaudited one? Okay, I'll give you an option. Okay. Let's say for example, I have an option that I count standalone financial statement of S4 as unaudited, or I count SFS of S4 as audited. I have these two options. Okay, Mansha? What option you will choose? Very good, Tanisha. Yes. I'll give you 5 minutes more. Think on this. Okay, Mansha. Okay, Suraj. I'll give you 5 minutes more. Think on this. Very important part. And second question is that based on the above selection of option, based on the above selection of option, do you think that there would be different reporting implications in case of any one answer compared to other? In other words, basically, that let's say for example, if I select audited, then whether do you think it will have a different reporting implication compared to if I select that as an unaudited? Do you think it will be shown differently in report based on the audit and unaudited, audited and unaudited? If yes, then where? Like, what is the implication? What is the implication of changing status of financial statement from audited to unaudited in audit report of CFS? Again, understand, selection of audited or unaudited may result in implication in reporting. So the question is, first question is, do you think there is any difference in reporting of unaudited or audited financial statement? Let's say I decide I count it unaudited. Will it make a difference in my reporting if I count it as an audited instead of unaudited, or instead of unaudited I count an audited? Do you think it will make a difference in reporting? If yes, then where? So first question is whether you will count audited or unaudited, the audit report or the audit of financial statement performed by the MNO auditors. Let's say if I count audited, then what is the reporting implication of that? And compared to if I count it as an unaudited. So two questions together. Okay, Anumula, very good. Okay, Charu, very good. And where, Charu, you will your based on your answer, where will you do that? Okay, Suraj. Okay, Tanisha. Okay, Anumula. Very good. Okay, let me tell you. First of all, the answer to the first question is I will count this as an audited. But after performing procedures as specified in SA 600. Why? Reason because SA 600 never stops me from, relying upon the audit report or work performed by a person who is not a member of institute. So SA basically is never stopping me on that. Okay. So for example, if I go to chapter 3 notes that we prepared at that particular point in time, remember I discussed at that point in time principals, auditors procedure, which include the principal auditor should consider the competency of other auditor except when the other auditor is a member of ICAI. Plus, yeah, if principal auditor is other than the member of, if the component auditor is other than the member of ICAI, then the competency of other auditors is required to be verified. Plus, when the component auditor is different or he is not the member of institute, at that point in time, there are some procedures that are required to be performed. Like, for example, this one, this principal auditor needs to communicate the other auditor the work that the other auditors, the work of the other auditor that will be used by the principal auditor, areas requiring special consideration, procedure for the identification of intercomponent transactions, significant accounting and auditing requirements, then summary questionnaire, observations issued by the other auditors. So a lot of things are there that are required to be considered when the component auditor is not a member of institute, and that is feasible, like that is possible. That component auditor is not the member of institute, and I can still rely. Okay, so if I can rely subject to the SA 600, then the question comes is there any reporting implication if I change the status from unaudited to audited or audited to unaudited? The answer to that is yes, there is. And that is at two places. One, SA 600 reporting, which is in other matter paragraph. Okay. Second is additional audit procedures. See, if that is an unaudited, then based on the materiality, I need to decide whether I need to perform any additional audit procedures or not. And number two, with respect to reporting on to the other matter paragraph as per SA 800. Now, remember, as per SA 600, sorry, my mistake. SA 600, we have to report in other matter paragraphs about the components that we have not audited. This one. Like, remember in previous lectures also, we have discussed this particular paragraph that we did not audit the financial statement of one subsidiary of this much, has this much revenue, asset and everything. And the audit report was provided to us. Same way, if there is an unaudited subsidiary, we will name the unaudited subsidiary over here. Okay. So, based on the type of your category of the financial statement, audited or unaudited, other matter paragraph will get impacted. Number two, your audit procedures will get impacted because you need to consider the materiality of unaudited portion. And if the portion is material, and if I count it as an unaudited, then I might need to audit that also. But that again depends upon the materiality of the unaudited portion. Clear? Any doubt till now, guys? Any doubt? Any doubt? So the question is, can we appoint some other auditor to audit such a component if we count that as an unaudited? Yes, we can do that. That is permissible. Provided the management agrees, or the management of the component management is also agreeing for the appointment of that auditor. Any doubt, guys? No? Okay. So guys, if no further doubts, then in the next lecture, what I will be doing is I will be continuing the topic of the group audit. We need to solve some questions also on this. Okay. Then we will start a new chapter also in the next chapter if time permits. That is chapter 14, special features of audit of NBFC, banks and NBFC. We need to start that also. But so we will be completing chapter 13 with the questions, and we will starting chapter 14. Okay. Now, what I'll suggest is If you have any doubts, okay, then you read it, the chapter 13. Okay, and then you might also have some doubts. You might not be able to understand, some points in chapter 13. Come up with your doubt in the next lecture. Come up with your doubts in the next lecture then, based on your reading, because readings will definitely give you another set of doubts. I'm sure. Okay, so there are a few questions over here. Let me take that one. Number one. If the financial statements are called as an unaudited one, then are we required to report in other meta paragraph? Answer is yes. Whether audited, unaudited, you need to report in other meta paragraph if that has been used in the consolidation. Unless and until it is not audited by you. Nowadays, since global standards and the local standards are similar, only few instances might be there of unaudited. Or yeah, actually, in most of the jurisdiction and most of the countries, you have similar kind of auditing standards. But let's say where you don't have a similar kind of auditing standards, I may still go for unaudited. Anumula, you can just post your doubt here with respect to previous chapters, and you can also post. So what I'll suggest is, if you guys have any doubt with respect to any of the previous chapter, don't worry. Whenever you join the session, okay, at whatever time, post it with a chapter number, and if you have some page number or something, what I will do is after the completion of the lecture, I will take that particular doubt. Before ending the session and completion of the topic, or let's say I have completed the chapter, I am going to start new chapter. Before that, I will take your doubt. But make sure you drop your doubt in the questions. Don't wait for the end of the session. You drop it at the start itself. I'll read it and I'll immediately call out that okay, I'll be taking at the end or in the between of the session. So don't worry on that. If you have any doubts with respect to any of your previous chapters, any of your previous topics, ask freely. Okay. If principal auditor has appointed the other auditor for component, then still it is required in OM paragraph till the time you are not audited by yourself, like you have not audited on your own. You are required to report under other meta paragraph, because in that case also you are relying upon the work of another auditor. How to remember all such SA and FRF together? Practice. Trust me, reading and practice. The more you will read, the more you will practice, the more you will remember the things. Don't depend just on listening the lectures. No, reading is required. Multiple, sometimes, we need to read multiple source of information. For example, we might read study module. You might read auditing pronouncement. You might need read guidance note. So if you read multiple things, then by default you will be able to remember the names and everything in detail, because you are reading multiple times. So just like if you read something multiple times, you by default somehow unconsciously start remembering those things. SA 620 is for expert, not for the other auditor. Any further doubt, guys? And second thing, I just tell you one small trick. So whatever summary notes we are preparing, whatever summary notes, see, everyone, first of all, you need to identify and assess which topics are, some people have some topics, good hand on some topics. Let's say, for example, you might be good in remembering company tax provision. You might be good at remembering, some other topic in audit. And there might be some topics which you might find difficult to remember, difficult to understand. Okay. Now, identify those topics, first of all, which are difficult for you. Number two, use the summary or, summary notes that we are preparing. What I used to do is, in the morning, when I used to start, or, in whenever during the day, I used to get a time when I'm fresh. Okay, when I'm fresh, basically, when my mind is fresh, I'm able to read more or something, able to understand more. Not after the lunch, because after the lunch, most of the time, people feel sleepy or something. That's why. So, in the morning or in the evening, once you start your studies again, take 10 minutes or 15 minutes. I'm not talking about half an hour, 1 hour. No, 10 to 15 minutes. Go through summary note of a particular topic, of a particular chapter, which you find difficult. For example, you find difficult essay 315. I'm not asking you to revise essay 315 daily basis. No. Today, let's say, for example, take 10 minutes, go through summary notes of essay 315, summary notes quickly. Fine. If it is taking time, go some topics of essay 315. Okay, go through in the summary notes. Okay, spend 10-15 minutes, not more than that. Okay, by this way, make a habit of daily referring your summary notes, daily referring to the difficult topics that you find it, difficult to remember or understand. By this way, without investing much of your time, you will be reading continuously your topics. You will be in touch with your topics and you won't forget them. Okay. So, summary notes, that's why very, very important. Please prepare along with me. After the end of this session also, I will upload these notes. Okay. Any further doubt, guys? Any further doubt? No? No doubts? Okay, guys. If no further doubts, thank you. Thank you for participating in the lecture. I'll see you in the next lecture. Thank you very much.